Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you Morning Call Express. So as we said there in the intro, today does kick off a two-day Fed meeting. Scott, how do you think the market is holding up heading in today?
What's interesting is I still hear so many complaints about the market, that it, lethargic, lacks momentum, not sexy, but overall, I think we're heading or we're above where we were post-election.
Now, what do you think are the key levels to watch in the S&P right now?
So if we go to the chart, we'll take a look at the S&P because that's what I like to track versus the headlines. We had a nice move. That's your November 16th low. This part of the move was a bit more sexy because look how, compressed to the downside it was. This is when we broke the trend that was intact from June 4th, had a pretty nice, I think 8-9% move to the downside. So that first bounce is usually quick and there's power and there's participation. But then once you get into higher areas, it becomes a little bit more choppy, a little bit more directed at specific trades. But as of right now, we're starting to get above the moving averages. We closed above the 50-day. I'd say, above just 1423. Your next level that I think is going to pose some resistance comes in around 1434.
Now, it seems as though all eyes have been on Apple every single day. The media's been harping on this stock. What do you think of it, maybe in the short to midterm?
It's just been very violent, and violent gyrations typically is institutions getting out of stock. At this point, if you want to look at you could look at micro and macro. First things first, we'll go micro. So if you take a look at the chart of Apple, you will see that if you take a close look of what just transpired the last few days, this was that November low, and when it did the red dog reversal, 522, gave you a quick move to 594-ish. And then failed, and look how quickly that happened. And this is after a move from about 700 all the way down to 505. So I would think short-term traders are going to use this small trend to trade against. You have a low, a higher low. A lot of people thought yesterday it would just fall apart, and it didn't. So I would say, step by step, let's see. Apple's up $4 or $5. Let's see if Apple can get and stay above 538. That would be constructive for the stock. What would really be constructive for the stock if it can get and stay above, 555 in the next few sessions. So overall, on a micro basis, this is what we're trading against. This is the first objective, and it's crazy to say for Apple. You go more macro though, and you look at this pattern here and look where it is from the left shoulder, the head, and this potential right shoulder. We're hovering at big time support. If this support were to give way, then you have 486 and then 440. So as of right now, I would watch it closely and just don't have a blind eye to it.
What other potential setups do you see out there right now that are high up on your radar?
Well, the cloud computing space is starting to wake up. I was looking at CRM the other day, Salesforce.com. You look at it right here, nice tight setup. At this particular point, if you're a macro investor and you're holding it, it looks good for cash flow. If this thing could start to get above 160, I think it's on its game. If you remember VMW, also it's a lower level trade, nice tight setup here, something to do for traders. If this could start to get above, just say 93-ish, it's a lower level play, but it could get going a bit. And even FFIV. This one has been, a laggard, but you have a tight setup here. So, you could see more upside. So in this market, it's just, there's haves, there's have-nots, there's just active trades, and then there's holds. And at this particular point, you just have to be that careful and not do too much.
What about the banks, which have been acting well? Goldman had been lagging the group, but woke up a little bit yesterday. So what do you think of it here?
I think the banks broke out well last week, and it was a little confusing because not all of them went. We focused on Bank of America. If you look at the chart before we get into Goldman of Bank of America, still very healthy. Okay, Bank of America, really nice breakout. This was the focus. It was on the A list above 10. Look where it is now, holding, going sideways. So at this point, if this gets above this, 1068 today, you go to your weekly chart, and it's back on the road to 12 to 14. As far as Goldman Sachs, I think it could wake up. It'd be healthy for the market. Nice tight pattern coming in here. A small little reversal yesterday. I did enter some, I'm sorry. But for this to get going, it's got to get above like this 118 and get a nice wide range bar to set this in motion.
Okay, we're going to talk about all of this and more in the long version, so stay with us.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.